RBI is actually injecting a lot of money in the industry and trying to help ecosystem industry get better. So I think rural India as a theme is going to do a lot of great stuff in 2025. When rural India will do good, I see a lot of PSU bank penetration in rural India. People in rural India, they'll deposit more in these banks, they'll take more loans.
For salaried employees, May 1st, you'll start seeing the increased benefit of tax cuts.
One of the major news I saw is a very favorite D2C brand that I use in my kitchen raised a Series A round of 48 crores.
Look how fast people's emotions are changing. Till last month, everyone had the fear of being invested. That means they were afraid that will the market fall more? Will the market fall more? And now that the market has started recovering, everyone has FOMO again. That is fear of missing out. Will I miss the next rally is what everyone is thinking.
Definitely. If you even look into my comment section or the comment section we see in our videos, people are like, okay, now please give me some stocks where I can invest. Give me some sectors which can outperform. There is FOMO everywhere.
Yeah. There were giants like HDFC Bank, Kotak Mahindra Bank, Reliance for that matter, who haven't been performing a lot, and all of a sudden, all of them are moving up, and Bank Nifty is at an all-time high. So things are changing. Market is at the up, and FOMO is real.
Yeah, so that's where we thought it's a good beginning to the financial year if we were to do some sectoral analysis. And 3 sectors came into our radar, right? So through our research and through multiple technical tools that we use, 3 sectors came into our radar. And that's what we're going to discuss today. Hopefully, this won't be taken as investment advice because we are not SEBI registered research analysts. This is an educational platform where we share our thoughts and views. And if you have any thoughts of your own, please make sure that you comment down below so that we can learn together along with you as well.
Speaking about research analysts and themes, right? Sectors or themes to look out for in 2025. I met this very popular, very famous small case manager, a SEBI registered research analyst who's a manager and posting on a small case. He's one of the top 10 best performers on small case. And he was like, the theme, or because he has insights from small case team and he keeps speaking to their team, he understands that what sells on small case primarily is thematic and sectoral funds.
Yeah.
So those are the kind of funds or baskets which gets the most subscription and gets sold the most on small case. But the specific small case manager was of an opinion that it's just trend and fad and people just come in, invest into such funds, and when they start performing bad, they get out, and these investors are finally getting nothing out of it because they're not using it in the right manner. And this manager was of the opinion that all portfolio should be sector agnostic, market cap agnostic, and the objective for any fund should be to make a good CAGR without much drawdown and volatility. I think that is what I also align to. That is what primarily investors should aspire for. But then, the only merit in sectoral or thematic funds is if you're really interested, find the best one and understand the thesis, get in, have that conviction and play it out. That is when someone can actually do wonders to their portfolio if they play it right. But playing it right is something that very less people do. But let's try to at least do that.
So let's get started with the 24th episode of the Aftermarket Podcast. Let me introduce the participants of the podcast here. My name is Ajay Ajit. This is Nihal Bandapalli.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
Yeah.
So I'll quickly set the agenda for the day. We'll quickly look into the 3 sectors that we were talking about. Why those sectors are interesting. Again, we'll present our hypothesis. Would love to hear from everyone in the comments as well. Then get into what is a possible way you should look into investing into them. The possible methods of investing and the risks along with it, right? So you will get a whole idea before getting into the sectoral investing here.
So one interesting fact or data that when I was looking into it, what I found was, if we consider the calendar year, which is from January 1st to now April end, we can assume, right? Today is the 1st of May. So in this time frame, Nifty has moved up, or Nifty has given a net percentage gain of 3.5%. And even if we look at from April 1st, which is a new financial year that started, Nifty is still at 3.5%. But there is a possibility of few sectors, few themes outperforming Nifty in coming days as well. So I want us to understand what are those sectors, what can we find reasons why they would outperform, and then understand. But before getting into that, give me those 3 sectors which are in your watch list or which we are now actually looking into.
So the first one is Nifty FMCG. We have discussed a hypothesis here and presented it in front of you. We'll dig in a bit more deeper into that today. The second one is Nifty PSU Bank. Again, we have a lot of hypotheses. You can see that Nifty Bank, Bank Nifty is performing really well now, but PSU Bank is not. So we'll get into why the index could outperform in the upcoming quarters. And third, we have the India's defense index, right? That also we believe for certain reasons that it has the potential to outperform in the upcoming few quarters. So those are the 3 sectors.
So for the first discussion topic, let us pick PSU banks as a topic. I know you mentioned it second after FMCG, but let us take it as first. Why? Because Bank Nifty has outperformed and it is already at all-time high. So I want to decode this PSU banks first.
So primarily, Bank Nifty has been rallying, and that created a lot of interest. Why is Nifty PSU Bank not moving up to the same mark as private banks? That was the first trigger to look into the topic. Then the assumption or the hypothesis was also validated in some part with the relative rotational graphs or the sector rotational graphs that I use. I've presented an entire video on it. You guys can check it out here. So based on these 2 triggers, I decided to look more deeply into a Nifty PSU Bank, and it looked very interesting.
But Ajay, I'm sure there are so many new audience that came into our channel and have no context what you're talking. So maybe you should even explain what that tool is. What does it tell?
So basically, it is just a simple tool, a simple chart with 4 quadrants. And each of the 4 quadrants means something. And the quadrant that we should ideally be looking forward is the improving or the leading category. This means that these are the sectors which have the potential to do well in the upcoming quarters. And how do you know this? It is basic, simple mathematics. These are sectors which are showing strength comparing to the rest of the market. That is why it is called as relative rotational graph.
Yeah.
Right? So it is trying to find the relative strength of the particular index compared to the rest of the market.
Yeah. And how does it find what are the rules, etc. are explained in the video anyway. So if anybody's interested, they can watch that video.
Yeah. So it's an interesting tool to use as well. You can see that every sector moves in a rotational way.
Yeah.
And this rotation, if you pick the right moments in that graph, you can catch some of the rally. It's not for a long-term, let's say multi-year view. It could be a multi-month view. That's how the tool presents itself.
Rightly said. But again, let us actually go back to the topic, right? Of banks moving up, especially private banks. What is a major trigger for them to move in? RBI intervened something. So do you want to expand on that?
Yeah, I think Fin Nifty first broke its all-time high and started moving up, and then Bank Nifty followed the lead. And we were all in office very intrigued and curious as to, hey, what is even happening, right?
Yeah.
So that's where we stumbled upon the fact that RBI is actually injecting a lot of money in the industry and trying to help the ecosystem industry get better. And that is the primary reason why banks are all doing good, and even NBFCs for that matter.
Yeah, from January, RBI is said to have injected more than 11.5 lakh crore into the banking industry through multiple operations. So there are different tools that they use called as open market operations and VRRs. So all of these are basically tools or weapons in RBI's arsenal, which they use in time of needs, right? In time the industry needs it, they'll come out with certain schemes, certain practices with which the banking industry can get more liquidity. And with this higher liquidity, as always, any industry will thrive, and especially the banking finance industry, which involves money being rotated and cash flow, right? I think this liquidity helped them a lot. And that's why from January, you can see that Bank Nifty has been very strong. Fin Nifty gave a breakout in March, as Sharik said, and Bank Nifty right now has hit an all-time high when all other sectors are still recovering from the drawdowns.
I know you have explained quite a bit, but for the viewers, it could be still a little bit more technical. So let us break it down a little bit. So why does a RBI have to intervene and inject funds to increase liquidity? What is even the thought process? Why does RBI even do that?
So I'll try to keep it simple. So in times of distress, in times of the banking sector having certain problems, RBI has to intervene. Because if it does not intervene, it will create a structural problem for the entire country's economy, right? So they have to intervene. So they do so by all these transactions and different methods.
So ideally, RBI has to pump in money through some way, right? So what is that? What is that instrument, or what is that mediator where RBI can't directly just say, okay, I'll give you 1 lakh crores to HDFC or ICICI, right? There has to be some transactional stuff. So how do they do that?
So I'll give you a simple example. One tool that they use is open market operations. So the concept here is very simple. Banks will be holding a lot of government securities in their treasury. They'll be holding a lot of government securities, and RBI will give them liquidity for that. So RBI will start purchasing all your government
Corporate bonds
securities,
or securities.
yeah, securities that you're holding, so that the bank gets cash, right? The cash that they need in return for selling the bonds to RBI.
And this cash can be again used to give it out as loans and increase the money circulation in the economy.
Yeah. So again, in the economy, banks actually control how much loans are being given out. They might be very careful in not lending out loans. So what will happen if banks don't lend out? They reduce lending. The entire economy will come into a trouble state. Like people, if they do not have enough credit, businesses can't grow, people's lives will be affected. So RBI does not want that. And like you said, if RBI pumps in this liquidity, the entire economy will benefit.
So according to this logic, RBI has infused money across banking sector is what I understood. But again, only private banks has outperformed. And is this the actual reason why we are thinking that PSU is yet to outperform?
Yeah, so the hypothesis right now is these RBI operations, they are impartial, right? So there is no, I'll give this money only to private banks or give this liquidity only to private banks. It is impartial, and private sector banks are now leading the stock rally. So considering that 2024, both sectors, private and public in banks, moved similarly, I think the new changes that RBI is bringing, PSU banks are now lagging and they will eventually catch up. That's the hypothesis here.
No, but I also personally feel there are two other reasons why PSU banks could do better in 2025. One being a larger theme for India, which I believe in, based on the recent budget. So 2025 budget is doing a lot for rural India. So I think rural India as a theme is going to do a lot of great stuff in 2025. And when rural India will do good, I see a lot of PSU bank penetration in rural India. So these people in rural India, they'll deposit more in these banks, they'll take more loans, they'll pay it back on time. I believe at least that's going to happen because government is doing a lot to make growth happen and make the lives better in rural India. So I think that could be one reason why PSU banks could do well.
So largely, I think the points that Sharik said, including rural demand and even the net interest margin not being passed or the rate cuts not being passed on to the customers, one can argue that it is broadly there for private and PSU banks. Then what is the difference here? If you're looking from January 1st, Nifty private bank is up by more than 10%, while Nifty PSU bank is flat. There is absolutely no movement. And the primary hypothesis, again, I would say is that there is some catching up that could happen. And when the market stabilizes as it is doing right now, the PSU banks could start catching up.
So now I understood why our viewers also should look into PSU banks. Just, I would still say look into it. Don't actively go and pick PSU bank thematic funds or start investing. You should also do your own research and understand why.
Yeah, we'll get into how to invest or where to invest in the next part.
Yeah, so that is where let's move on to the FMCG sector, because Sharik, when he was mentioning about government doing a lot of stuff around tax cut and helping rural demand increase and spending power of end consumer increase, that is obviously there is no brainer that it should go into FMCG as well, right? So that is where I see one reason why we should be talking about FMCG as well.
So it is an evergreen sector. When any economy across the world grows, their FMCG sector will also grow, just like banking, right? So it's a fundamental need of human beings, and it's an evergreen sector. Let's put it that way. Now, there are certain reasons why we believe that in the upcoming few quarters, this sector looks interesting. And that is what we can discuss here.
When the income tax, all these changes were landing, data came out that nearly 1 lakh crore worth of liquidity will increase in the market, which is put across all the people who are taxpayers of the country. all of the money they are saving in terms of tax is nearly 1 lakh crore.
Yeah.
So this is 1 lakh crore which could come into the economy, and I believe a lot of these money could go into FMCG sector, them buying more essentials and more needs, and they'll be spending more essentially.
Yeah, because on a per capita or a per person basis, the amount is not huge. Maybe you might be getting a maximum benefit of 6,000 rupees per person per month, right? So this is not enough for you to go out and buy a new car, right? But you will end up improving your lifestyle in different ways, and FMCG products are one way to do that. So I believe that, again, when the tax cuts start coming in for salaried employees, May 1st, you'll start seeing the increased benefit of tax cuts. So when that comes in, we had this hypothesis earlier also. I think it's going to start to play out in this upcoming few quarters.
Yeah, so I already see people talking in office. They're getting X amount of salary now.
Yeah.
So from the next month, they're going to get X plus 5,000 maybe. So that is more like 5,000 extra free money.
Yeah.
Like, let's be real. What are they going to do? I mean, they're not going to increase their SIP amount, right?
Yeah.
Even if a few of them are going to increase their SIP amount, which is investing for their future, some percent is still left, and that money will get spent. And when it gets spent, where is it most probably going to go into? All these primary requirements and going out, I mean, spending in restaurants or traveling or quick spends that they'll be doing while they're living.
And it all ends up in FMCG. Even a restaurant, when you spend, they'll buy atta, they'll buy other goods for them to make their stuff, right? So it'll end up in the FMCG sector.
So basically, consumption is going to increase, and consumption increase leads to FMCG companies doing well. So that's a strong theme that I also believe in.
So again, that's one theme. That's one why of why FMCG could outperform, but there are other reasons as well. So NABARD is a national agricultural bank, and it's a government body. Now, they had come out with an economic survey for 24-25. And in that, they clearly indicated that rural demand for FMCG products and rural consumption is increasing, right? And even the FMCG players, they had also in their multiple quarterly earnings said that, hey, rural demand is increasing in the country, and that is good to see. The problem there was urban demand is not increasing. That's why FMCG companies are not seeing their sales growth, their profit growth. And urban demand, for that to increase, I think it can be a good trigger.
Yeah.
So while rural demand is anyway increasing, this new tax cuts can boost urban demand, I feel.
Yeah. So your rural theme is what exactly I said in the last thing as well, right? It is theme for India in the coming year. And that's where, just like we spoke about PSU Bank, there is going to be more money and better living standards for people in rural India. That's what at least the government is trying to do. So when they have more money at hand, they're not only going to deposit in the bank like we were talking in the previous section, they're going to spend it more.
Yeah.
Just like when urban people are going to have more money in hand, when there's more prosperity in rural India, they will spend more. So that's one theme of rural India, which I think will help FMCG companies as well. But there is another angle of rural India, which is growing more aspirational rural India, where kids there, youth there, they want to get better. They want to have a better lifestyle now.
Yeah.
And also thanks to social media and the quick exposure they have to the larger world, they also want to have a better lifestyle, and from that want and aspiration for a better, more luxurious lifestyle, they want to spend more, they want to consume more. And where is that money going in? Again, consumption leading into money going into the hands of FMCG companies. And I believe that is another major lever, the rising rural demand. There are stock portfolios and themes built just to capture that alone. But that's going to help FMCG companies a lot.
Yeah. So again, even this sector also came up in the relative rotational graph, the RRG charts. So these two sectors came in really strong there in the improving category. That means it could turn into a situation where these two sectors that we discussed right now could outperform in the upcoming quarters.
And also the fact that FMCG as an index and major large FMCG stocks have not been moving at all. I don't know, what was it, Dabur? Since some COVID and all, it has not given any returns at all. So there are major large FMCG brands in the country stock prices have been moved over the last many years, that is also making a strong case that, hey, now that things are moving, things are getting better, things have been moving, right? It's
Yeah.
not like consumption is not increasing. So maybe now the time is coming for FMCG to give great returns. So yeah, looking forward.
These are cash-rich companies. Any problems that they have, like new age brands coming up, they'll just solve it through buying them, right?
Yeah.
That's what the industry has always done. Minimalist being acquired by HUL is a classic example here. More than 3,000 crores spent by Hindustan Unilever, right?
Yeah.
So when they see that their demand for their products is not rising and quick commerce is coming in, they'll go ahead and acquire all these brands, I believe, and they'll solve even that problem and move ahead.
Yeah,
Yeah.
very interesting point. I also feel that a lot of these D2C brands which are coming up and becoming very popular, they are also raising a lot of investments from VCs. I think the thesis from VCs itself is the fact that grow them enough so that some major large FMCG giant would acquire them, and that's good exit
Yeah.
for the founders and for the early VC investors. Today morning, I woke up, I scrolled my phone, and the one of the major news I saw is a very favorite D2C brand that I use in my kitchen raised a Series A round of 48 crores. And it
Oh.
is nothing but Anveshan.
Okay.
Anveshan is a cooking oil brand. It came out on Shark Tank back in, I don't remember the season. Again, the narrative was really healthy, oil, good for you, better for you. And they're costly, expensive like all these D2C brands, but they position themselves as so better for you.
Yeah.
And we started using Anveshan's oil for almost all the oils now are from Anveshan. Again, no brand endorsement, but they just raised a 48 crore Series A. Again, just I think what I'm trying to communicate here is that the thesis from VCs itself is the fact that FMCG companies
Will
would
come and
acquire them.
acquire.
Yeah. So it's all adding up to the FMCG narrative or FMCG listed stocks getting better.
Yeah, and also historically, FMCG has been that go-to safe sector to invest in. Not everything else can collapse as long as humans are there. They are going to consume food and stuff, and that is meant to thrive eventually.
And the sector and the stocks have also historically performed really well.
Yeah.
So it's not like it's just a thesis and the stocks don't reflect that. Even historically, if you leave out the last 3-4 years, the stocks and the sector has performed really well. But I think it's just the fact that people are not excited when they hear, hey, Nifty FMCG could be an interesting sector.
Yeah.
But when they hear PSU Bank or something else, they're excited. That
That is true.
No,
That is
doesn't
true.
make sense.
In the world
Yeah.
of thematic sectoral funds, everything like
EVs and-
EVs.
They want the fancy stuff. They don't want the regular go-to. Like, who would invest in Mayata company? Nobody. But if somebody is going to come up and say, I'm going to launch some AI stuff, then that is more fancy for them. They feel like I'm riding the new wave. I'm not riding the older wave.
Manufacturing wave.
All of that. But but again, now that we understood why FMCG could outperform and it is looking promising for now, I would like to move on to our next third sector, which is the defense sector. So in the past few days, the defense stocks have been rallying a lot. Even if you look at HAL or Bharat Electronics, all of these companies have rallied more than 10%, 12%, 13% as well. And even the defense sector index, what we call India Defense Index, if I'm not wrong, that has also been outperforming a lot. And the future is also looking promising in this sector. So
yes, so in times of geopolitical instability and uncertainty, these stocks tend to do well. That is a common hypothesis that exists. And we all know what is happening around the country right now. So this situation in the country will warrant a need for higher self-reliance on our defense projects. And how will that come in? The government spending more on defense projects. And who gets these projects? The defense companies who are listed in India. Mostly PSUs.
Yeah.
There are some private companies as well. So when they start getting these contracts, long-term contracts for huge tens of thousands of crores of rupees, that will surely reflect on their P&L table as well. And that's what we are going for. That's a hypothesis here.
Another interesting thing that we can notice is countries across the world are increasing their defense spend. So when the Russia-Ukraine war happened, Germany as a country which is not really in the mix of things, even they started increasing their defense spend considerably. I mean, from where they were as part of defense spend as part of the GDP, now it has increased is what we can see.
Yeah, nearly 28% increase in their defense spends in just 1 year.
Correct.
Imagine the scale or the base at which they're operating. It's going to be billions of dollars, which is getting added on their military spending just this last year.
And this is Germany alone. And then there are a lot of other countries, and all of them are thinking the same. Hey, anything could go wrong, things could go bad, and with what's happening, the trade war also in the mix now. So
Yeah.
countries are preparing, getting ready, and keeping their arsenal full. And when they do that, and because the bases are speaking big money here, huge money.
Yeah.
That's the kind of spend countries do on defense spends, right?
Yeah.
And all this money have to go where? Eventually go into some defense companies which are working either on final defense equipments or smaller components which will eventually be sold to other defense manufacturers. So these money across countries are being flown into companies which are working on defense equipment. So, and I think that's a huge
Yeah.
factor leading
And-
to defense companies to do well.
Yeah, and when you're talking about huge amounts of money, just to put in perspective, India defense budget is almost 6.8 lakh crore.
Yeah.
6.8
Every year.
lakh crore every year,
And it's increasing.
And this year is what 6.8 lakh crore budget was allocated to it. So every year, again and again, this budget is only going to increase. And I think US is on the top, spending, another lakhs and lakhs of crores in this, and that money has to go into some companies,
Correct.
either manufacturing or exporting and all of those sectors.
Yeah. So as you said, increase in defense expenditure is being seen in India, and as Sharik said, across the world also. So what's happening here? Even exports of Indian defense products is increasing.
And that's where I believe there are good Indian companies which are actually reaping the benefit of other countries spending on defense. So there are companies in India which are doing great job and exporting, which is serving other countries or whoever requires defense materials.
It can be ships, it can be the small electronic components.
Yeah.
Yes.
Yeah.
So all put together, interesting number is nearly 23,000 crores of export is what Indian companies are doing in the defense sector. And it is up nearly 20% from last year. It was around 20,000 crores last year. Now it's up to 23,000 crores. I think our companies are doing a good job. They would only get better, and things are looking bright for them. Yeah.
Yeah. Now I got the gist of the whole context. One, we were looking at the PSU banks, then we were looking at FMCG, and now we are looking at defense. So even the viewers would have had clarity why they could outperform and all that metrics. Now tell me how to invest, where to invest, what should be like the go-to, like the practical hands-on thing.
Yeah, so for how to invest, obviously the first thing that comes to everyone's mind would be direct stock picking.
Yeah.
So when you're looking into PSU banks, there is SBI, which is a popular name. There is Bank of Maharashtra, which is showing amazing asset quality growth despite hard times for the industry. Then if you're looking at the FMCG space, there are the giants like Sharik already mentioned, your Daburs, your HUL, your Maricos, all these are giants in the industry. And
Yeah.
coming into defense, there are certain interesting stocks like Solar Industries, which is mainly producing explosives for the country. Then there are defense PSU stocks like HAL, which makes fighter jets, and BEL, which makes the electronics
Yeah.
components. So all these are your stock specific research that you can put in, right? A lot of interesting companies. You can find hidden gems, but when you're going for a theme, you should always make sure that you are not investing just into one or two stocks,
Yeah.
and you're going into a basket of stocks. That is very necessary when you're going or chasing after a theme.
And those are available through thematic funds available. There is a fund manager sitting in, handling all the stocks or the sector you pick in, and then he's doing his job. in
Yeah,
it.
yeah. And my theory here is that if you're anyway willing to put in some amount of time to do the research, right, into the what index could shape up and for how long this could play out, you're already putting in some time. So it will take you 10x more time to find out each stock, research on that, and find out which is the best stock.
Yeah.
One easy thing you can do is go after index funds. Index funds exist for every single sector that we talked about right now. PSU banks, yes. FMCG, yes. Obviously, some people would already be investing. And even for Nifty India Defense,
Yeah.
there are some really interesting new actual index funds
Yeah.
which have started coming. I think there's one from Motilal. Grow has an ETF, interestingly. So all this industry is starting to come up where people are investing through thematic mutual funds and ETFs.
Yeah, and even when we are telling thematic mutual funds, I want our viewers also to understand that thematic mutual fund doesn't necessarily mean that they might have only defense stocks if they are choosing a defense thematic fund. There could be a subsidiaries which are helping these defense stocks grow. There could be banking stocks also included in that. There could be some other components. It's a theme that you're investing. It is not just defense if you're picking a thematic fund. So viewers also has to understand that logic.
Yeah.
And
But mostly if you're going for an index fund,
Yeah.
Again, thematic funds also can be active and passive.
Yep.
Yeah.
Right. So in active, the fund managers might take these decisions. Like, for example, if a certain bank is helping a certain FMCG company a lot, that bank could be included in a FMCG thematic fund. But in an index fund, it will only be the funds in that index or that sector.
yeah, because it is just a reflection of that stocks anyway.
Yeah.
And even when they are choosing a thematic fund or index fund, you have to understand that the top layer comes in is the index, broad level index investing anyway. Then comes this sectoral thematic, which you have to do some research and understand, and then goes to an individual stock pick. So these are the layers. So you have to understand that you're somewhere have like doing an active work here, researching on your own. So the capital allocation that you're putting to these funds also have to be very critically thought of, and not have much more exposure. Like you've said, they have to have that in their mind.
Yeah, I would say that not more than 10% into a thematic play.
Yeah.
Because there are times where you'll see huge drawdowns.
Correct.
So if you look at the Nifty India Defense Fund recently, I think over the last 6 months, it saw a drawdown of nearly 30%. So you can't tolerate that in a normal portfolio.
Correct.
Right? When Nifty fell by 10%, people were freaking out.
Yeah.
They won't accept a 30% drawdown in their large portfolio. So always keep it to a limited exposure and be ready to play around and change it and move in and out of the funds faster than you would for a very long-term investing model.
Yeah, so that is where I'll present my thoughts around thematic and sectoral funds, right? Though it is in real craze and everyone wants to have a piece of it, let's be very fundamental and understand a good, responsible portfolio theory.
Yeah.
For anybody to build a responsible portfolio, there has to be a core and then there has to be a satellite. So think about Earth at the center and moon going around us,
Yeah.
right? Your core should be your core strong portfolio,
Yeah.
which could be either mutual funds or stocks. Let's talk about mutual funds for the time being. It should be diversified. There should be enough gold, debt, asset allocation, market cap allocation, all of those, so that the core stays intact. So you have to increase the debt with time and all of this, all the responsible things you do with your core, right? So keep the core really strong, and core will take your portfolio to wherever you primarily want to go.
Yeah.
Now, satellite is your risky bets.
Yeah.
Satellite is maybe your fun bets to some extent. More importantly, it's your risky bets so that maybe you can increase your returns in the long term.
Yeah.
So if this theory is very clear, all the thematic funds, sectoral funds, active stock picking, a lot of such things can come as a satellite.
Yeah.
And this is in line with what Ajay was telling, right? So that is where under 10%, 20% allocation, that is slightly subjective depending on who the person is.
Definitely.
For a person, maybe only 50% is core, want to be slightly more risky,
Yeah.
so want satellite to be 50%.
Yeah.
But if a person is more responsible, do not want to play this game, just want to have a happy, fun life and want to eventually retire, then can even be 90% core and 10% satellite, or can be only core with
Yeah.
no satellite. That also works.
Yeah.
But so that's subjective. But then,
Because in a sense that if the economy thrives and your PSU banks and your FMCG all start performing, even your core, which is going to be, let's say, a Nifty mutual fund or a mid-cap mutual fund, they could also perform.
Yeah.
yeah, correct.
That's in the long term.
Yeah, so that's where maybe it makes sense to keep the satellite less. So, and now when you go inside the satellite, if you want to really take a sectoral thematic bet, again, the safer way to do is to go via portfolio of stocks or basket of stocks. A famous saying, right? Don't put all your eggs in one basket, right?
Yeah.
So yeah, doing that is what I also believe in. But I personally don't have a lot of sectoral thematic bets because I'm a person, I speak about this a lot, right? I'm still figuring out my satellite. I've been building my core, which is mutual funds. I have a lot of mutual funds which I publicly speak about, and then I'm trading options on top of it. My satellite from a portfolio concept is something which I'm still figuring out. What is a framework with which I can build? How is it going to really help me? What percent should I have? Because I already have my core and options trading on top of it, which is already giving me great returns, taking me to financial freedom in an accelerated manner. So should I even have a satellite? What should be the composition of it? Satellite for me is some amount which I'm having fun with by investing into stocks which I like today.
Yeah.
I'm using a regret minimization framework there. I'm like, hey, are there stocks which I at any point of my life thought would do good, put some money there.
Yeah.
So that later I shouldn't have the regret of not being invested there.
Yeah.
So that's my satellite today.
But let me
It could be
ve-
sectoral as well.
Let me be very clear. When Sharik says he does that with a very small percentage of his
Correct.
portfolio.
Yeah, maybe
Like,
not even 1%
not
goes
even
into
1%.
one
Correct,
stock.
Correct.
Yeah.
So that is just for regret minimization. My
Yeah.
satellite objective for me is not to increase returns, is to minimize regret for me in the future, and also to learn and get better so that eventually I can have a great satellite in my portfolio.
Yeah. So I think that's where we can wrap up. And even this episode gives a lot of value to our audience here. I think it is one of the most value giving podcasts that we have done in a while, and really proud of that. Hope you also agree to that and participate in the comments and show us the love there.
Yeah.
So I think that's where we can wrap up the 24th episode of the Aftermarket Podcast. Thank you all for showing up. This is Ajay Adit signing off. See you. Bye-bye.
Yeah, and before me signing off, I would just clarify one thing.
Yeah.
Is a lot of people in the comment section keep coming and asking us, you give us a lot of ways on how to analyze a stock, how to analyze a theme and all. Now show us your portfolio, show us if you have actually invested in it. So one thing I would like to clarify is, we might do a lot of study. We might have our intentions to how to look into a stock. We might do our fundamental analysis, and that is to teach you guys. But again, we might be following a different set of investing strategies, like how Sharik mentioned, core and a satellite. We could be working on a different thing because our goal is different, our path is different. But we are doing these sessions to educate people who want to learn this stuff. So it is very different. It is not necessary that whenever we put across our thoughts, our visions, our knowledge, it is not necessary that we might 100% do it in a real life. It is all based on where you want to reach, what is your goal, what are you looking for from that doings of your investing. So people have to understand that. And we are honest enough and transparent enough to show what we are doing. So I hope people appreciate that and
that's
understand
the
that.
subjective angle of investing and personal finance in
Yeah.
general, right? I mean, one can talk about all theoretically right things when they are on media because they are responsible and they should do it because there's a diverse set of audience who would be viewing, right?
Yeah.
I would in a video talk great stuff about FD. I would in another video talk bad things about FD as well because it could be appealing to different audience.
Yeah.
While I might or might not be invested into FDs, but what matters is like whoever is preaching or speaking should have an active portfolio and should be doing responsible or right things in their context and subjectivity in their life. Where in my case, I have my portfolio, I have strategy index funds.
Yeah.
We speak a lot about that in our podcast, and I actually adopted that. That's something that I'm personally using.
Yeah.
But this sectoral and this thematic things is something that I personally don't use.
Yeah, I
And I'm open
personally
about
said
it.
that I'll invest in an FMCG fund, and I did.
Correct.
Yeah.
Right.
And tomorrow we would speak about something completely different, which we might or might not do. So, but it's all highly context.
But if it is giving them value, we'll talk about
yeah,
it.
absolutely.
Yeah. So let's wrap up.
Yep.
Yes. Thank you guys. See you. Bye-bye.
Bye.
Bye.